Welcome to TradeTheMBI.com. This is John. This report is for the 1st of September. Well, and here we are, right back at the highs. In fact, we closed, and I mentioned this in my little email note, 2470. So, not bad, considering we started August. Just from a review standpoint, the open for August was at 68. So, technically, a higher month. Even if it's just fractional, which is okay. I mean, there were plenty of soft signals in there that we were expecting some weakness, but every time we got the weakness, we got new buy setups within it, and that only propelled things back. And obviously with the ABMs, we talked about that anytime moving back above it. It was a clear sign to still be long the market. We weren't expecting anything to break down, and this was the key point in understanding that while you have growth and expectations for continued growth, pretty hard to justify market meltdown like you hear in the news day in and day out. It's like they're begging for it. It's just not, it's a strange thing. I mean, the real question will be, will the hurricane impede things, or did it really cause a galvanization of support, and will it cause the budget to move forward, or at least get a temporary stopgap extension on the debt ceiling? Those kinds of things will actually make a significant impact, and if that happens, then we'll actually see things even probably propel further. The interesting part about this is if you look at the NASDAQ, we talked about it was starting to outperform again like it had before. It didn't suffer the same drop as the S&P, and now it's actually moving past. So that's becoming key strength point and really driving the market. I mean, up here at 6,000 now, so breaking that here at this particular point, that's going to generate some excitement. Could also give a little bit of resistance to it, but within that buy signal, the question about being short with as many people talking about it, and this is always the thing, whenever everyone talks about a crash, it rarely happens. So many people are trying to be on the forefront of being short for the turn that they're missing what we've talked about for the last year, the resemblances between the early 90s and the potential of moving to higher growth policies and lower government spending really can drive the economy, particularly with the lower interest rate. The question really becomes, can they get rid of the Obamacare taxes that really have crippled employers from hiring, and if that can take place along with some kind of tax reform and or even infrastructure, you're only going to see things skyrocket. So the elevated euro is already causing some contention between the U.S. Munchkin was out there the other day saying that he was fine with a weak dollar and the euro zone system not producing the same level of growth or inflation that America is producing, even though they, it's interesting because you hear about inflation in Europe because they actually count everything, unlike the U.S. that excludes all the things that actually cost more in life, which, you have to take some of these things with a grain of salt and weigh them for what they are. But still, 118 is way outside the range that we've seen, and whether it's a blow-off, we've had a series of short signals come through with it, even the most recent at the peak here. But the fact that we've had the cyan under red has been supportive of maintaining that general long and not expecting too much of a decline, at least at this particular point. And interestingly enough, bonds keep going. There's significant talk that inflation is still running way under what the expectations for the Fed are, and that suggests that maybe there won't be a rate hike. It just seems hard to believe that. But I think that the idea that they want to normalize, and they're supposed to be talking about cleaning up their balance sheet for the Fed, and who's going to be the buyer of that, and that'll be an interesting one going forward, because that may be part of pumping the price of the treasuries there, and that way there's more room to liquidate as it starts to decline. And USO, nice rebound, not unexpected, like we were talking about. There's a significant increase in demand now taking place, and that is a good sign for global growth prospects, and that too will drive the market significantly. Yes, everyone was talking about how gold was about to collapse, blah, blah, blah. I told you that was just a bunch of baloney, that all we were doing was backfilling some of the positive extremes. We didn't even get all the way there. It's that strong. I mean, look at that. The cyan under the red has been no question about it. And of course, there's been no question all the way from back over here, when we talked about it at number 2, after that series of lengthy declines. Let's see if we can squeeze that just a little bit. You can see it. So we came back down from there, and all we've done is just return back up to it. So right within expectations. From a 5K standpoint, what a ridiculously nothing to do day. It's, go long and pretty much do nothing. Now, we had a couple of little short signals that popped in here, but as soon as they came through, they ended up with new buy configurations that caused them. We didn't even get the full return to the 50% line because we had rising highs at the same time we had the rising lows, and then we went into flat static mode. And we just elevated back to the highs, and then we started to see the rising lows. But then as soon as that happens, we ended up with more highs, and just negates it. In the same situation, took place right now. Now we're in the flatten mode. If that starts to increase, we can see the range is starting to tighten, and it's a similar effect to like a Bollinger setup. You're either going to continue to break higher in this case, or you're going to start to see it expand to the downside. So at this particular point, it still looks higher, and we're not even overbought. So it's another powerful thing at this peak here, 2473. There's still room to go. Would not be surprised to get to that 85, 86 range that I've talked about before, that will propel things to the 2500 marker. And I don't see any reason to suggest that we're not. I mean, if you have a new paradigm of 3% or greater growth, the market multiple is definitely going to climb. And I think that's something people have been missing for the earlier part of this year when they've been so pessimistic. But that's neither here nor there. All we can do is go with what our signals are showing, and that's the easiest way to follow it for now. As always, though, let me go ahead and click this so you can see what the current ABM levels are. All the way down to 69 for the low side of it. Not bad. Trade well. We'll talk again later on the Skype chat.